A very good evening, students. So welcome to Shreshta Professional Courses. Myself, Sambashiva Mulka, faculty for Taxation and Financial Management. In this session, we are going to discuss about the yesterday's taxation paper, CA Inter May 2022 taxation paper. Right, sir. As expected, the very first question is a problem from total income problems. So in every attempt, right, the very first question is from the chapter problems on total income, right, sir? And it is given for 14 marks, right? So, and majority of the provisions are taken from the PGBP, and then we have some provisions from the TDS and TCS, and then we have the provisions from even income from other sources, right, sir? And we have the provisions from capital gains, right? So it is a consolidated problem. Problems on total income means it is a consolidated problem which covers all the provisions from the 5 heads of incomes. Then you will have the provisions from TDS and TCS. Then you will have the provisions from chapter 6A deductions. All these put together will be asked as a consolidated problem, and the problem is given for 14 marks. Now, this session I am going to just briefly discuss about the question paper. In-depth analysis of the question paper along with the suggested answers. I will do it in another video. I will do it in another video. Okay, ma. Here I am going to discuss a brief about the question paper. Clear? Next. And as you know that ignore the provisions of section 115 BAC optional rate scheme. I think the day before exam, some students asked me in the telegram, sir, whether optional rate scheme, that concept asked for this exam. I said like I've not said like they are not asked because it is ICI exam, and which is always unpredictable. I said that it is having very less chances optional rate scheme, right? So as expected, they said like ignore the provisions of section 115 BAC. So we asked to find out the total income and tax payable, and then after that question number 2A. Question number 2A, yes, it is from the chapter TDS. You have given with the totally 3 situations. For these 3 situations, you asked to deal with the TDS provisions, right, sir? And next, moving on. Question number 2B, Mr. Harsh furnishes the following details for the year ended. This is a problem asked from the chapter set off and carry forward of losses. Set off and carry forward of losses, right, sir? And the similar problem we have already done in our Shreshta material. Let me take you there to our material. Here you can see this is a chapter set off and carry forward of losses, ma, and you can see it is similar to problem number 3, sir. Right, salary received from a partnership firm, salary received as a partner from a partnership firm, and then loss and sale of shares listed in stock exchanges, then loss and sale of shares listed in BSE, and then long-term capital gain and sale of land, right, sir? And you can see long-term capital gain and sale of land. Okay, now, so like this, almost 80% of the problem similar to our the problem which we have already discussed in our Shreshta material, sir, right? So then you can easily go through and you can usually do this problem, sir, once you practice this problem number 3, right, sir? And next, question number 2C. Sardak is a member of HUF. It consists of himself, wife Juhi, and major son Arjun, and minor daughter Aditi. Sardak transferred his house property acquired through his personal income to HUF without any consideration. Conversion of self-occupied property into joint property. Section 64, subsection 2 of the Income Tax Act. Conversion of self-occupied property into joint property. Yes or no? This, an example was discussed, and the same kind of example asked in the main exam. So if you gone through that particular example now, it will be very easy for you to do this problem number 2C. Right. Sarthak converted his property into HUF property, and after some time, that HUF got partitioned, and such property is being divided equally. Net annual value is given and determine the tax implications. Do you remember our example running notes? Let me take you there. Yeah, this is the running notes of the clubbing provisions. This problem is from the clubbing provisions, clubbing provisions chapter. In the clubbing provisions, section number 64, subsection 2, conversion of SOP stands for self-occupied property into joint property. You can see the example we have discussed, Mr. Nagarjuna, right? He's having Annapurna Studios as self-occupied property, and then that property was transferred in favor of Nagarjuna HUF, right, sir? Right, where the members are Nagarjuna, Amla, Chaitanya, Samantha, and Akhil. Right. When I was discussing this example, there is no divorce between Chai and Sam, but of course now they got divorced. So total income letting out from Annapurna Studios 100 crores per annum. So that will be clubbed with the total income of Nagarjuna. But assume that if there is a partition, So whenever there is a partition, the total income, distributed, the property was distributed, Annapurna distributed equally among all the members. Now in this scenario, what happens, Amma? Nagarjuna share 20 crores taxable in his hands. Totally 5 members kadama. So 100 crores divided by 5. 20 crores each member will get as their share of revenue. So Nagarjuna share taxable in the hands of Nagarjuna together with Amala's share. So clubbed with the total income of Nagarjuna. Are you following, sir? With respect to Chai, Sam, and Aki, their income is separately taxable in their hands. So here what you need to write, sir, the income of the Sarthak taxable in his hands along with his wife's income, his wife's share of income. Are you following, sir? Every one of you. That is what you need to write here. Clear? Next. After that, 3A. 3A is a combination of income from other sources and capital gains. Both are there, ma. Income from other sources and capital gains. A also a similar problem we have in our Shreshta material. Let me take you there. So you can see here. Yeah. Similar to problem number 2, sir. So similar to problem number 2, sir, you can see here, Mr. Lalit, a dealer in shares and securities. And here we have seen Mr. A dealer in shares and securities, received without the consideration during the financial year. So he entered into the following transactions. And you can see here, the problem is like cash gift 24,000 each from his 4 friends, received a motor car 5 lakhs as gift from friend on the occasion of his marriage. Similar problem, cash gift 75,000 of his anniversary, and then he got a bullion, a plot of land, right, sir? Next. And after that, these 2 paragraphs is about the capital gains, a plot of land, bullion. You can see all the provisions are here, yeah, here plot of land discussion, and then he took over the possession of the residential house property. You can see Mr. A took the possession of the property booked by him 2 years ago, right? Lalit took the possession of the residential house booked by him 2 years back. So similar to this problem number 2, sir, similar to this problem number 2. If you have practiced this problem number 2, and this problem is very, very easy, sir. Okay, now. And next. 3B. 3B is from the chapter residential status. Is from the chapter residential status. Right, sir. So the very second chapter, the first chapter we discussed is the introduction to income tax, and the second chapter is the residential status. Are you following, sir? Every one of you. And next. And this also we have a similar kind of concept in the page number 18. You can see here practice question number 1, practice question number 2. here somewhat we can relate this practice question number 2 to our this question, sir, to this question. Somewhat we can like especially in these point number B and point number C, we can relate somewhat because this question is from the latest amendment, right? So from that latest amendment, based on the latest amendment, we prepared the practice questions 1 and 2, especially the 2 is from the latest amendment, right? These are the answers related to your that question. Next, and then 3C. So these 3C is from this question is from the chapter miscellaneous concepts from income tax, miscellaneous concepts, and where we discussed about the concept of deemed income, right, sir? Deemed income, unexplained money, unexplained jewelry, unexplained gold. Yes or no? We have discussed, right? Let me take you there. Yeah, here you can see, sir, unexplained money, jewelry, etc. Section 69A, where the in any previous year the assessee found to be the owner of any money, bullion, jewelry, any money, bullion, jewelry, or the other valuable articles which are not recorded in the books of account, and the assessee has no explanation or offers unsatisfactory explanation, then money and the value of the assets found may be charged as the income of the assessee for that previous year. Right. So that is what the question all about. Assessee found to be the owner of the gold, market value of which 50 lakhs during the financial year 31st March 2022. But he recorded to have spent 10,000 in acquiring the same. So that means here undervalued, not fully disclosed. Here you can see not fully disclosed. Where in any previous year, the assessee has made any investment or found to be the owner of any bullion or jewelry, the assessing officer finds that the amount expended for making such investments exceeds the amount recorded in the books, then that amount may be charged as income of that assessee for that previous year. Right, not fully disclosed. 69B. Section 69B is a relevant answer here. Okay, now already covered in our Shreshta material. Next, 4A. And 4A this is from the chapter capital gains, and then this is from the chapter exempted incomes. Exempted incomes section deals with the section 10AA. Are you following here? Right, and similar kind of question we have now of regarding that section 10AA, and we have in I'll show you that. So here you can see, sir. So, industrial undertaking established in special economic zone, which has commenced operations in 1920. Total turnover of the establishment 300 lakhs, which includes 120 lakhs export turnover. Right. Similar to this, S is a sales unit, and and it is a normal area. Right. So this problem is also based on section 10AA. Right. Even problem number 5 also based on section 10AA. Totally, we have done two problems. Totally, we have done two problems for section 10AA. If you have done these two problems now, then this will be very, very easy for you. And next, then after that, Mr. Cabra engaged in the business of growing and curing. This is also from the chapter miscellaneous concepts. Miscellaneous concepts in income tax, and which deals with the taxability of the agricultural and non-agricultural incomes. And this is similar to the problem number, I can say problem number 2 of, problem number 2, and let me take you there. Yeah, here it is, Mr. Dengjin. Same problem, sir. Right? Cabra is engaged in the business of growing and curing for the processing of the coffee in the state of Kerala. And here you can see Tengjing engaged in the composite business of growing and curing further processing of coffee in Kur, Karnataka. Okay, now. And then the whole of the coffee grown in his plantation is cured. Same sentence you can see here. The whole of the coffee grown in his plantation is cured. Right. Then after that, relevant information pertaining to the year. You can see relevant information pertaining to the year ended 31st March. Next, opening balance of the car, opening balance of the machinery, expenses incurred in growing of the coffee, expenses of curing of the coffee, and sale value of the cured coffee. Same. Opening return on value of the car, opening return on the machinery, expenses incurred in growing coffee, curing of the coffee, and sale value. Same points now. Only the change is that, only the even amounts also same, sir. Even the amounts also same. You can see 3 lakhs, 15 lakhs, 3 lakhs, 10,000, 3 lakhs, 15 lakhs, 3 lakh 10,000, 3 lakhs and 22 lakhs. Okay, now. And the car is an agricultural operation, machine is used for curing. Same problem as it is. Okay, now, every one of you. Next, C point. C point is from the chapter return of income. Return of income, and where the question is all about a revised return. Revised return. And revised return, we have a discussion in the page number 155. You can see revised return. From this revised return, these questions were asked. These questions were asked. You can see. Explain in brief whether the return of income can be revised in section 139.5 in the following cases: belated return, return already revised twice, and return of loss. Belated return. Can a belated return revised? Yes. Can a loss return revised? Yes. Can a revised return be revised again? A second revised return can be filed? Yes. So straight away we have the points in our materials here. Okay, now next. And this is also from the chapter return of income, and where it is about the defective return, section 139.9. In the same we can discuss. We have discussed about the defective return. In this concept now, the question is from this particular topic. This particular topic, procedure for rectifying the defect. You can see here, due to some inconsistent information provided in the return of income furnished under section 139.1, the assessing officer considers defective. How the assessing officer will deal with the same? What we will do, what the assessing officer will do, the assessing officer may intimate the defect in the return within 15 days or extended time limit. Then what are the consequences if defect is not required within the time allowed? So if not required, if the defect is not required, then the return is to be treated as invalid. Next, specify the remedies available if not rectified within the time allowed by the assessing officer. You can see belated rectification. However, if the assessee rectify the mistake after the time allowed, but before the assessment is made, the officer can treat the return is valid. That's it. So provision for rectifying the defect. The same question asked here. Okay, now. So that's all about the income tax. Income tax. You can see almost 85% to 90% of the questions or provisions are from the Shreshta material. Right. Now let's moving on to the GST as well. The very first question is from the chapter. A question is given to you and you asked about the finding out of the net minimum GST payable in cash. So that means here you need to calculate your outward taxable output tax liability. Then what is the total input tax credit available? So I just the input tax credit available with your output tax liability. Then find out what is the minimum amount of the GST payable through cash. Same kind of the problems we have done in the chapter input tax credit, chapter number 6, right, sir? And next 6a. This question is from the chapter time and value of supply. That is chapter number 5 in our material, time and value of supply. And this question is mainly with respect to determination of the value of supply. That is what asked, determine the value of taxable supply made by. Same question we have in our material, sir, in our Shrestha material. 6a. Come to page number 131 of the GST material. And in that you can see here you can see, sir, page number 133, sorry, page number 133, problem number 17. Similar problems here. You can see here, list price of the goods exclusive of taxes and discounts. List price of the goods exclusive of taxes. Then tax levied by the municipal authority on sale of such goods. Then you can see here, tax levied by the municipal authority. And then parking charges not included, subsidy received from an NGO, paid to one vendors, parking charges, subsidy received from an NGO. Clear now? Right, almost similar problem set, same problem we have, similar problem 6a. If you have done that problem number 17 of our Shreshta material from the chapter time and value of supply, it could be a very easy problem for you. And next 6b 1. So this is about exemptions chapter number 4, charitable and religious related services. Exemptions chapter number 4. Yes or no? Right? And let me take you there, sir, to that provision. The question is all about Glory Limited is engaged in the manufacturing and selling of cosmetic products. So it's a business entity. Seva Trust, a charitable organization, approached Glory Limited for providing the financial assistance for its charitable activities. Glory Limited donated a sum of rupees 2 lakhs to Seva Trust with a condition. This is important point. With a condition that Seva Trust will place a hoarding at the entrance of the trust premises displaying the picture of the product sold by Glory Limited. So whenever you are making donations or grants, if there is no commercial gain out of the donations or grants, then there will be no GST is leviable, sir. But if there is a commercial gain, then that donations or grants will be subjected to be taxed. Yes or no? The same points we have discussed here. You can check it out. This example, sir. This example. If donation is received with a specific instructions between the donor and the receiver, that host an advertisement for promoting of the business of the donor will be liable to GST. Are you following, sir? Every one of you. So the same example given here as a question. That's it. Next, second point. Swami of Chennai working as a manager with ABC Limited. This is what, import of services. Import of services. And we have already learned that as long as the consideration is there, right? Whether you are importing the services for your personal purposes, whether you are importing the services for your business purposes, doesn't matter. As long as the consideration factor is involving when it comes to the import of services, it will be a taxable supply. Okay, now the same provision we have discussed in the page number 26. You can see the topic importation of services for consideration, whether or not in the courts or in furtherance of business. And the same example, sir. The same example asked as question. Here, Shiva Prasad received architect services for his house from an architect located in New York. Consideration $5,000. The same year asked Ma Swami of Chennai. Then he consulted Mr. Jacobs and Company, London, took advice for buying a residential house. Similar kind of example, na? Right. Then 7a. Zinc Trans of Kolkata Limited engaged in trading of transmitters. And, this question is all about, the time limit for the issuance of invoices when it comes to the sale or return basis. Here they have sold the goods on sale or return basis. For these purposes, you need to look into the chapter number 8. Chapter number 8, where we have discussed about the tax invoice, debit note, credit note, e-way bill. Do you remember, sir? Every one of you. And let me take you to that provision. So tax invoice, debit notes, credit notes. And here you can see what is the time limit for the issuance of invoice. And when it comes to the invoice will be issued in the case of goods sent on sale or return basis. The time limit is the invoice shall be issued before or at the time of supply or 6 months from the date of removal, whichever is earlier. The same provision asked here, sir. Right. Explain the provisions on the GST relating to the issuance of invoices with the exact dates on which tax invoices needs to be issued. Clear. Next, 7b. One consolidated e-way bill can be generated for multiple invoices. E-way bill, same chapter, same chapter. And the provision was mentioned in 209. Yes, here you can see consolidated e-way bill. You have a concept called consolidated e-way bill. From this concept, you got this question. Okay, now consolidated e-way bill. After e-way bill has been generated where the multiple consignments are intended to be transported in one conveyance, the transporter may indicate the serial number of e-way bills generated in respect of each of such consignment electronically on the common portal. And a consolidated e-way bill in form number GST EWB02 may be generated by him. But of course, we have some limits, ma. Basing on that limits, we need to issue the consolidated e-way bill. Clear? Next. All taxpayers are required to file the GSTR1 only after at the end of the current tax period. Right? This is from the chapter returns under GST. Returns under GST. And the provision we have discussed in the page number 246, and where you can see here you can see the very first point, focus points. A taxpayer cannot file his GSTR1 before the end of the current tax period, but can fill the information of all the invoices generated. Right, sir? See, before the end of the current tax period, let us say the current tax period is May 2022. Now, today's date is May 23rd, 2022, May 23rd. So May month not yet completed. So regarding the May 2022, I cannot file my GSTR1 right now. I cannot file, but on a daily basis, I can fill the information. I can fill the information of the invoices which I am issued. On daily basis, I can fill the information, but filing is possible only after the end of the May month. But of course, we do have some exceptions. The exceptions are CTP and the cancellation cases, casual taxpayers and cancellation cases. Okay, now, so that's what the question here is. Next, eighth one. So eighth one is about government as a service provider and business as a service entity, service recipient. Reverse charge mechanism we have discussed in our RCM provisions in chapter number 3. Let me take you there. RCM provisions. Here you can see. Service provider is a central government, state government, union territory, local authority. Service recipient is a business entity. And the question is, under the GST law, taxes on taxable services supplied by CGSG to a business entity in India are payable by the recipient of services, right? State the exceptions of the above stated statement, exceptions. And here you can see supply of any services except, so these are all exceptions. These are all exceptions. Okay, now that is what the question asked for 5 marks. Next. B is a registered supplier of Uttar Pradesh doing the trading of taxable goods. He approaches you to understand the manner of utilization of input tax credit. It's a straightforward question. Utilization of input tax credit, we have learned in the first chapter. We have learned in the 6th chapter about the utilization of input tax credit. And you can see in the page number 155, where you can see, utilization of input tax credit. Clear? So you need to write these provisions. That's it, sir. Next. State any 5 circumstances under which the proper officer can cancel the registration on his own. So this comes under the chapter number 7, registration. Cancellation of registration and revocation of cancellation. And these are the situations where the registration can be cancelled by the proper officer on his own. Total you have given with the 6 points mark. You can write any of the 5 points here. You will get the 5 marks. Are you following, sir? So when it comes to GST also almost 95%, 90 to 95% of the paper covered in our Shrestha material. Some straightforward problems we have seen, some straightforward theory questions we have seen from our Shrestha material. So overall, the question paper was good. I cannot say the question paper is very tough. At the same time, I cannot say the question paper is very easy. Right, sir? But the paper was good. We can easily score 70 plus marks in this paper. Are you following, sir? So if you properly or thoroughly followed the our classes and properly taken care of our material, running notes, everything, you can see the running notes for every provision. We will be having an example. See, when it comes to 64.2, yes, this example itself asked in the main exam. Conversion of self-occupied into joint property, right, sir? Every chapter, every particular provision will be discussed with an example. Are you following or not, sir? Every one of you, right? So yes, definitely it is easily 70 plus scored, tax paper that May 2022. Expecting the same kind of situation prevails even for the November 2022 also. Okay, now hope you have all done very good when it comes to the taxation paper, right? So I wish you very all the best for your group 2 exams also. Okay, nice, sir. So this question paper detailed analysis along with the suggested answers, I will be discussed in another video, sir. This is only a brief discussion. Clear, sir? Right. So see you in the next session, sir. Till then, have a good day and good night.